What's up? What's up? What's up, everybody? We're going live in here in just a split second, but I got to ask you something. How are you feeling about these markets? Have you been holding on? Are you ready to go? Are you actually deserving of these profits? Well, here's the deal. If you've been stacking into these dips, then I think I got some good for you. We got some of the most bullish signals we've ever seen in the market, setting up for an absolute perfect storm. But that does not mean it cannot jack your ass around first. So do not get caught in these traps. I want to see everybody in the room right now. Throw a 1 in chat if you're ready to dive into these charts. Throw a 2 in chat if you want to dive into these charts and you're grateful. And throw a 3 in chat if you are one badass mofo, because we're about to drop into these charts here in just a second. What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy stream. As you can see, I'm not looking down on you. I'm just coming here from the home office of the place from which I was birthed here in Houston, Texas, here in my daddy's studio. I had a connecting flight from Vegas to back to Atlanta, and it just got delayed into oblivion. Silver lining, I got to spend the last day with my dad, and I'm here with the charts for you right now because we are a community. So let me know, everybody in the chat. Throw a 1 in chat if audio, visual, everything's good. I had to throw. We had some camera issues, and so this is where we're at right now. But the charts are what's important. Not looking up at my double chin right now. But don't worry, I'm in that health competition. We are going to bring it back. But I see everybody in here. We got Sawtooth, Alexander G, Ethan Smith, Alexander G. Again, shout out to you always. So much help you give, and of course, the illustrious and most ubiquitous name out there that all of us appreciate, Tig Old Biddy's in the house. Good to see you. We got to talk about what's going on right now in these markets because Bitcoin is doing some goods right now. We got Bitcoin hovering here above $67,000. We pull this, I got no keyboard here, so I'm going to have to be a little interesting in how we do it. There we go. Now we can see. We got Bitcoin hovering here at that 67,000, basically 300 mark. But look at this magic yellow line right here. It's not magic. It's just a data point that can let you know, are they playing positive? Are they looking to play negative? And we can see not only has it broken back beyond this weekly VWAP, which is what this yellow line is, we see the price consolidated a bit all the way until it came back in contact with this weekly VWAP, and it's riding it up right now. This is not an absolute given that price has to go up, and away from here, but this is showing that they're still in the cards for playing that positive spread. The price action right now, especially in the next 2 or 3 days, is going to be pivotally important over the next month or so about what's going to happen. And as I've been mentioning for the last, about 2 or 3 weeks, March 22nd, sorry, not March. See, I'm all discombobulated in this piece. May 22nd, May 23rd are the dates that I'm looking at. I'm really interested as to what's going to be going on here with Bitcoin, with the crypto market, and we have some signs in these charts right now. We have some data points outside of Bitcoin, much like, let me put it this way. If you have a car and you're driving down the road and your gas is low, and you also know that there's a gas shortage and the majority of gas stations don't have gas, are you going to have confidence you're going to get to that next city 300 miles away? No, because, there might not be any gas available for you. The same thing is true in these markets. If you want the price to go up, it's not just going to go up. It needs to have some fuel so it can burn those rockets to go higher. And that fuel in this case is liquidity. And we are seeing some incredible signs right now with the global liquidity, but also crypto liquidity and some other things. I got some charts I'm going to share for you right here in just a second. But shout out to everybody that's here in the room. By the way, if you don't know who I am, welcome to the family. You're getting this one-off show right now from my dad's home office. I'll be back in the BitLab studio tomorrow, but my name's Kelly Kellum. Welcome to the family. If you are here, that means that you are interested in having some success in this market, not just being held hostage by your emotion at every turn. If you haven't yet, hit that like button, hit that subscribe button, ding the bell, and let's continue on. We got some magic stuff to talk about today. So again, I apologize for the different setup today, but this is what we do. We roll with it, right? So let's come over to this chart right here. And this is a beautiful chart right here. This is something that I think is setting up for something incredible for price action here in Bitcoin. And that is right here. We see the surge in stablecoin deposits. Now, what are stablecoins? They are those assets that are essentially tied to the value of whatever selected said currency. In this case, we talk, most of the crypto market the world over does use USDT or USDC. or even USDT on Tron, USDT, because there's but it's tied to the value of the US dollar. The point here is that it is a crypto asset that is tied to the dollar. But if somebody's trying to get out of crypto entirely and they're selling to a stablecoin, this is indicative of them wanting to have capital available to continue and stay in the market, redeploy back into Bitcoin, Ethereum, Cardano, whatever it is, that asset that they're looking to trade and buy. In this case, we're seeing right here a surge in stablecoin deposits. So much like having coins flow onto exchange or come off of exchange in terms of, let's say, Bitcoin, when we see a huge amount of crypto being moved onto exchange, in this case, the asset itself, that tends to front run some sort of spike in sell pressure because people are moving their coins to be available to sell when they want to. So we have to pay attention to that. In this case, with stable coins, as stable coins are moving onto exchanges, this more often than not will lead to the ability to deploy back into the market. So we're seeing some setups here. Before we even get into that good, we're seeing the setups of not only this global liquidity we've talked about, there's so much, but also the liquidity that's actually within the crypto market moving into position to be available and ready to deploy. Now, I want to come back over here as well because we got to talk about BlackRock and Grayscale. We've been seeing over the last couple months, since January 10th, the majority of the flows of Grayscale, remember they had like 680 or 600 plus thousand Bitcoin. And if we look at this chart right here, we can see Grayscale's down to under 300,000 Bitcoin now. And that might sound scary. It's not scary whatsoever. This is something that a lot of people were expecting because of the Grayscale, the fee percentage was so, in some ways astronomically higher than we saw in any of the other Bitcoin spot ETFs. And in this case, we saw a lot of that rotation, and which also did cause sell pressure on the market, starting to evaporate or at least diminish significantly at the current point in time. In this case, we also see, look at this, since January 10th, actually I'd say January 11th when the ETF started trading, BlackRock already has basically approaching 300,000 Bitcoin purchase. This is just one Bitcoin spot ETF. We also see Fidelity, FBTC right here, up at 156,000 Bitcoin. So this is the reason why I find this important. And I know sometimes we're just tired of talking about the ETFs. We're tired. It's like, when the hell's price going up? Well, you got to look at these data points so you don't get lost in the emotional shuffle. In this case, what this is saying is, I wrote it out here in my tweet, Grayscale, GBTC starting to have inflows. They're actually been adding to their positions now. Basically this is reducing some of the sell pressure that has been on the market. Now, I want you to consider something. Price action since, let's actually go to the chart. I'm not going to just talk your ear off. Let's look at the chart. We're going to come right here, zoom it out. Let's go to daily. We're going to zoom out to the 11th. And I can tell just by looking at the chart, it's right here because I look at these charts so darn much. This is January 10th, January 11th. This is this right here. We have the sell-off and price action right here. The sell the rumor, buy the rumor, sell the news. And then what we got this large impulse to the upside. But the point here is that I want you to consider from January 11th to where we're at right now, we went from all the way as low as, was this $38,000, press shift, click on the thing here, get the measurement tool, there we go. Here to that top, that's a 95% increase in the face of Grayscale's rotation out of 300,000 Bitcoin. Price action went up with all that sell pressure that we have because, not just because it's some magic thing, it's where we're at in the market, because we can see that not only were BlackRock, Fidelity, Bitwise, VanEck, all these different Bitcoin spot ETFs stacking, but we also have seen a huge number. What was the metric we said last week? It was something like, it was just under 1,000. It's probably at 1,000 now. Institutional investors in basically deploying capital and adding Bitcoin spot ETFs or Bitcoin exposure to their books since January 10th, January 11th. It's 10x how many institutions were adding gold. So the whole point of all this is, that don't mean to make it sound convoluted. The reason why this is important is because we've seen price rise 95% in the face of Grayscale selling off 300,000 Bitcoin. But now we're also now getting the data points because remember, traditional markets are delayed in the data you can get. This is one of the reasons why I love Bitcoin and on-chain data and what you can see with the transparency of blockchains. In the face of that sell pressure, we've also seen astronomical increases in gains and growth in the number of adopters from some of the people that are going to make this next adoption wave of retail. Institution leads most people, but you are not sheep. All of you were here before all these institutions. So the point here is we have basically the leading edge of institutions. All of you were leading edge of retail because you were here before the mass majority. But there's also going to be the same thing that we see in institutional awareness and adoption of Bitcoin and basically the blockchain sort of standard, adding it to in some regards to their balance sheets and to their investment portfolios. Now, with that being said, there are going to be those first, there's Daddy-O in the background. There are going to be the leading edge of institutions that get in before everybody else, but we will then soon see this flood of other institutions. And the more institutions get involved, you could argue whether it's good or bad. Take that out of your mind. Let's look at this like an investor. Look at this like somebody that wants to make money in this market and also understand how to play where that wave of adoption is going to come from. The more institutions get involved, the more standard practice it's going to become acceptable for not only other institutions, but also just retail mom and pop. When they start seeing their trusted advisors, their trusted institutions, their trusted, it's funny to me, trusted institutions, kind of oxymoronic, right? But this is going to drive that wave. So even with these dips along the way, where we're at right now, this is all setting the stage for the life that you're going to have that's going to change so long as you can stay active and participate in this market. So let's continue on here. Coming back over to this, what were we just talking about? These institutions and also where we're at if we consider what's going on geopolitically. This is very interesting to me because what we're also seeing is central banks are buying twice as much gold than before. Now, what does this mean? Who cares? I want to buy Bitcoin. Great. Let's look at the data points and what they're alluding to. This is suggesting that central banks and institutions, and we remember about 2 months ago, we were talking about the $200 million a month in gold bars that were being bought at Costco. What does that signal to you? This signals people are saying, hey, man, we got to get our money in harder assets outside of the dollar. We're also seeing China deleveraging a bit or de-dollarizing a bit with the 52 or $54 billion in U.S. treasuries that they've offloaded. There's a little bit, there's quite a bit more awareness about a geopolitical stage, and some of it's misconstrued as it can be. But the point being is now with social media, with our phones, with Twitter, with Rumble, with Facebook, with Instagram, it's getting collectively more and more cumbersome and difficult for governments to really shape narrative or keep people in the dark. Now, the problem is there's so much misinformation out there. We can't tell what's right from wrong and what's true. But the point being is people are getting their eyes opened about what's going on with the lack of healthy established monetary policy that is for the people. And essentially that is what Bitcoin is programmed for, to put the power back in your hands. And we're also seeing that with this data point right here. Even if people aren't buying Bitcoin, the fact that they're buying twice as much gold than before, these central banks, it's like a signal for, protecting money because there's going to be some devaluing in the dollar. What does devaluing in the dollar mean? You might think it sucks. Let's take all our emotions out of it. When you look at the correlation over time with the dollar index, DXY, over Bitcoin, when the dollar down, Bitcoin up. When dollar up, Bitcoin down. It's a signal of where the risk is in the market. So this is not just banks buying twice as much gold. We also see ETFs have bought 4.5 times the amount of Bitcoin that's mined every day. This is the nature of what drives into a supply shock. And what happens when you have less available supply? Demand, you don't even have to change the demand. Just by having less supply, the demand becomes a premium for those, whatever asset that is, whether it's a Beanie Baby, a tulip, a Bitcoin, the love of a beautiful woman. What did it say?
If I join you, it's going to be $20. Put my face on it.
This is Daddy-O.
Baby.
This is Silky, everybody.
That's Silky here. How you doing?
That's my Daddy-O. The person that really got me into the internet, I was trying to mimic and follow my daddy's footsteps when I was but a wee young lad. Had my first company I started in 1995. I think I was 10 or 11. And it was like a website design company, professional web creations. Yeah, he's one of the smartest guys I know. But yeah, shout out to Ethan Smith for shouting out my Daddy-O. And coming back over here, what we're talking about, the ETFs are buying 4.5 times the amount of Bitcoin that's being mined. Supply shock. We're seeing record lows on what's going on with the exchange balances. And the whole point here is that people are moving and institutions are moving into hey, shout out Ethan Smith, $20 super chat. I'm going to buy my dad a beer later. He said, Brad's a man. And for all of you will be in the know. His nickname is Silky, and he's got a nice voice that he does with it. But what we're seeing here is that there's an appetite, that 300,000 Bitcoin that was dropped on the market and yet eaten up. The record time for which Bitcoin as a spot ETF went from 0 to 10 billion in assets under management, faster 10x than any other ETF in history. The appetite is here, and now the awareness and the comfort is starting to get normalized with even talking about Bitcoin. With it's becoming, you see what MicroStrategy's done over the last 3 years, and going from like a $500 million business to a multi-billion dollar business, specifically because they added Bitcoin on their balance sheet. Tiggle Bitty says, Silky kill 'em. So this is good. Things are moving towards Bitcoin being something that is an imperative when you look to the future. So when you see what's going on also, we have other things at play. Remember, I'm saying May 22nd, May 23rd. We have things that are lining up for that date, not just the full moon that happens to also be on the 22nd, which we've seen over time. I'm not a moon trader, but when you start seeing correlations, it's like, you know what? Let's just track this. Let's go to moon. Oh, that's not the right moon phases. And I'm only using this as something just to support another data point. Full moon up, full moon up, full moon up, full moon up, full moon, a little chop, but up. And I mean, this is full moon launch, full moon launch, full moon launch. Whether or not you believe it or not, you can't deny just the regularity of the strength that you're seeing when you get that full moon. But let's ignore the moon. Screw the moon, right? What about the fact that we have these earnings that are coming out this week? Big week, especially when you look at this right here, NVIDIA, especially when you look at Palo Alto Networks. You're seeing, very big companies that are within the tech industry. And when we talk about the AI narrative, like Render and Fetch and Ocean and GRT and Near, all writing that AI narrative. If NVIDIA outperforms again, which it very well may do, it very well may not. We'll have to see how it goes. But this is going to be a big thing. Then we also look to what's going right here. This is just funny to me. Look at the number of Fed speakers that we have this week. For instance, I put this here. I said, this is called narrative shaping, AKA drive confusion, AKA the Fed needs to confuse you as they rob you blind. This is what is going. This is why they also have a bill on the floor of the Senate or the House, I can't remember, to abolish the Fed. But I don't think that's going to happen. The people that run the world are deeply tied in with the Fed. So we got Fed Chair Powell, FOMC member Bostic, Waller, Barr, Jefferson. I mean, I'm not going to read. It's too many to even read out on the screen. Why would all these people need to be speaking this week? Remember, we have an election cycle year coming up right now, and they're going to do everything they can to make the facade and the charade of the U.S. economy look as good as possible. So even though it might not be good to cut, maybe it should be good to cut. They're going to create a narrative that makes you understand why they do what they do, because regardless of what they do, it's wrong because money printing is also going to be involved. So we've got to pay attention to. There's going to be some choppiness, I think, throughout this. But throughout this week, I think we're going to have some pressure alleviated from the shoulders of Bitcoin and the crypto market and just risk assets in general, I do think that June into July will likely be more bullish than not. And this is what's beautiful. Think about how far the price has come since January this year, up, and away. And I mean, what was the price actually? Let's go back to it right here. January. So from here, we talked about 95% gain from the end of January on. From the beginning of January, let's see, right? Yeah, so we had the little sell-off, about 95% gain from 38,000 up to 74. And in that time, we haven't seen any new retail interest. We're actually had a huge retraction of retail interest here, which we could tell by the search term phrases on Bitcoin. And the point being here is some people still throw a 1 in chat. Throw a 1 in chat. If you think the price 60, 70,000, do you think of this as a high price? Hopefully my computer's not locking up there. There we go. Do you find is it scary at 60, 70,000? Are you worried it can't go higher because of this price level? You're not familiar with an asset with this type of price level? Well, remember, there's no asset in the world like Bitcoin on the planet. And you still have assets in the traditional market like Berkshire Hathaway that was trading at $600,000 a share in February. So why can't Bitcoin do it? Now, price is where it's at right now. We've talked about this a lot. When we go back on time, I got to bring it up again. Let's get the moon phases off here because that's a little bit of a meme, but can't deny that correlation. But when we zoom back over here, this is that crazy chart. This is not what I wanted to show. Going to alts. That's the serial killer chart right there. There we go. So coming back here, I just have to remind you, I gotta give you the goods, baby. Coming back over here daily, we got to remember where we came from so we have some idea of where we're going. So we don't get so lost in the fold. Looking right here, previous all-time high, this $17, $18, $19,000 range, price action did what when we got there last time? We had to consolidate because there's some people out there that are like, this is high. I don't know if it's going to go higher. And then they go, God dang it, I should have just stayed in. There's a lot of key signals you can look at to get out. When you have a huge bear trend and price works its way all the way up to a previous all-time high and is just after the halving, anybody that's in this market that understands what's going on, and if you're watching this channel, you understand because I'm breaking things down for you on a daily basis. But this is a level for which the true excitement really happens. We can also see it in the previous cycle here. I don't know if this goes back far enough, but the previous cycle top was, I think it was roughly about in this zone right here. But what happened as the price action moved up into this territory? Let's turn off all the lines. Once we got in this zone, price action just, I mean, look at this. It just did what? It went like this and angled sharper and sharper to the upside. This is due to that fact of the new retail FOMO buyers coming in. I don't want people to get wrecked, but I also know that the most people that get wrecked are the people that also are largely responsible for that parabola going up. Hype cycle buyers. So when we look at where we're at right now, God dang it. When we look at where we're at right now, we come back into this time frame right here, zoom in on this, and we're coming into this zone. This is that previous all-time high zone. We have been doing the work that we understood was likely going to happen when we get to this level. So let's let the data tell us, should we be scared or no? Shout out Alex Green in the house. How you doing, my friend? We're going to be doing some member streams this week, by the way. Last week, I got a little sidetracked with just stuff I had to do in the background, but we are going to do a number of member streams this week in the BitLab. So make sure if you're not in there, get in there. Remember, you still have that lab.bitlabacademy.com/Kelly. You can still sign up half a month free. But let's continue on here because we got some really important data I want to look at before we do a little bit of TA before we go. And just, again, remember, when you feel worried, zoom out of the myopic stress zone that's under the daily. Everything under the daily is going to drive you crazy if you don't have strategy. When we see this this is similar to what I was just showing you. Previous all-time high, pause, launch. Previous all-time high, chop, let's wreck everybody that doesn't have a strategy, absolute launch. And we can see this also in this right here. 1 month after the halving, 2012, plus 9%. 2016, minus 10%. Oh my God, it's over. It's dead. Why did I get in? Let's not have those thoughts anymore. We have the data. Let the data be your friend. 2020, plus 6%. 2024, plus 5%. This is 1 month after halving, which is essentially where we're at today, -1. April 19th, we had the halving. So we're 100% directly in the cards for what we've seen in previous cycles. This is what's more interesting. And what's the difference between 1 month and 1 year? Myopic and emotional, I'm going to make some damn money and change my life. It pays to have vision. It pays to not say, what do I want right now? Say, what can I provide myself in the future by sitting on my damn hands, making sure I'm listening to the right people. And I don't want you to just listen to me. Listen to several different people with different viewpoints. Look at what your strategy is. What do you actually want from this market? Sometimes all you need to do is 2 things. Well, I'll say 3. Educate yourself, buy, and be patient. The majority of the market isn't the parabola. The majority of the market is a bear market, a lot of consolidation, chopping everybody out that doesn't deserve to be here. And the way you can determine if you deserve to be here at the top of the bull market is if you can identify buys and be willing to be patient. Have a strategy, but also think what your exit strategy is. Because we can see 1 year after the halving, 2012, 8,839%. Now, remember, this was early on in the market, so I don't believe we're going to get that kind of return. But somewhere in this scope, 200 to 600%, right? 1 year after halving, 2016 was plus 285, 2020 plus 548%. What is it going to be this time? And remember, we have all these new capital inroads that are providing capital for the market to go higher. And the interesting thing is going to be when we get this flood right here of the indication that people are like, how do I get Bitcoin? It's probably going to happen after we break 80, 90, $100,000 is, I think, what will likely get a small rejection initially, similar like we're doing right now with the price action fighting that zone. But once we break beyond that, that's the biggest advertisement Bitcoin ever has, is when it breaks to new highs. Because everybody goes, oh, how do I get in on it? Those that make money are those that are here before all those noisy narratives come into play. But we're seeing the same thing. And this is, I showed this last week, but we got to show it again. The stochastic RSI come down here, fully reset and long. I mean, we see this each time this is reset. I mean, here, up, here. This is, look at this. This is a COVID shutdown. This fully reset and then absolute launchage. We just need to be patient. Where is it at? I had a couple more. Oh, this is the other thing. Everybody was talking about when institutions get here, investment advisors, etc., and they talk about, yeah, man, they did all these models with 600,000, 900,000, million plus, with institutions and retail doing 1% to 2% allocations. But what we're seeing, interestingly, is kind of a different narrative shape from that, which is that we saw, I think it was Pine Ridge Capital or something last week that had 23% allocation of all their assets under management they put into Bitcoin. We see here Horizon Kinetic Asset Management has $913 million worth of Bitcoin invested in BlackRock and Grayscale, making up 14%. Now, I'll say this with a caveat. We cannot see this number, and we can also not see that 23% from last week and think, okay, now we need to readjust all our models because everybody's going to be 10 to 14 to 20%. We also have to understand, as I said before, these institutions that are getting in now, it's very similar. It's analogous to if you got into crypto 3-4 years ago, you were at the leading edge. You were the early adopters. Now we're in the next stage of institutional adoption, right? But the people that are getting in now first, these first 2,000, 3,000 people that are institutions that do add Bitcoin and likely will more often than not be through Bitcoin spot ETFs, they're the early adopters of the institutional class. So we're getting these different waves of adopters coming in. So the reason that's important is because we are seeing, yes, this is 14%. We saw Pine Ridge at 23%. But they're also the early adopters, which means they see something different than the people that are going to be trickling in later. They're trying to capitalize on knowing that it's still so early. You don't get multi-hundred million, multi-billion, massive institutions, in some cases, multi-trillion. Morgan Stanley also been layering in as well. You don't get them making massive allocations to an asset typically when it's at a high, especially when they're front running the majority of the world. Even though there's a lot of us that have been in the game here in the market for some time. Remember, there's about around 8 billion people on the planet, and it's still in the hundreds of millions that are even aware of Bitcoin. So it is so early, I don't even know what to tell you. Then we got to see where we're at more locally. Let's start getting into that TA on a local basis, smaller time frame. We got the 50 and the 200. Basically, we got the 50 and the 100 exponential moving averages crossed. Excuse me, bullish cross right here, meaning the faster moving average had dipped below and is crossing back above, signaling that there's it's known as a golden cross, signaling that we're really getting that momentum starting to shift in favor of the bulls. This is the last time it happened. Let me turn off my face there. This is the last time it happened. This is when price was 24,000, and look at where price is now. This is a deviation, bear trap, launch. We're having this deviation now below. It's getting a little bit more hectic because the stakes are a lot higher. The value of Bitcoin is starting to make it become more important to people, and therefore it becomes more of an emotional, engaged trade, which is why you're seeing this chop here. But this is looking good. Even again, I'm not ruling out that we still get a washout down to 52 or something like that. In fact, the market would be ripe to take that because we see all this buying pressure coming in the background. But I mean, there's not even a but there. I'm just bullish. Oh, this is what I was really excited to share with you right here, which is from TED Talks Macro. Here are some important charts I'm watching right now, mainly focused around TradFi and crypto liquidity. What is that number one thing we need? Is there a way to turn this back on? The number one thing we need here is liquidity to drive volume. There's a 65-month liquidity cycle here that we just bottomed in October and are starting to tick up. And this basically shows that it could go all the way through 2026. This is what we want when we're expecting risk assets to pump higher. We want liquidity coming in. We want gas for the car so we could drive up that damn hill. Because it takes a lot of energy. The further, more steep hill you're climbing, it takes more and more exponential energy to drive that price higher. So we got to be aware of that. But this is, I hadn't even seen this chart before, but this is beautiful that we just bottomed in October, now coming up. Let's look at the chart on October to now and see what's going on. Let's go to the daily. Where's October? October would be, wouldn't you know it? This is where the liquidity turned on, right here. Come here, do option V, okay, let's see. Was it bullish from here? Yeah, I mean, this is massive. 26,000 all the way up. We've done 180% move to the upside since liquidity cycle started kicking back on. And we're in for more liquidity. Are you not bullish enough, everybody? Golly. And then we can also see this is a global liquidity. This is that negative blip we had. This is cross back positive. M2 money supply, the rate of expansion is the lowest since 1990s and shows there is plenty of room to the upside for easing liquidity conditions. I mean, let's go, guys. Let's go. Crypto liquidity right here. Week over week. We had a bit of these dips down last year. And then this is that dip that we had right in October before we launched up. And each time this barely crosses the zero line, it just gets turned right back around. Things are in favor of things going right here. And then, of course, this is the ETF flows. All the capital, if you subtract and add together the outflows from Grayscale and the inflows on the other ETFs, even with the outflows on Grayscale, we still had, look at, this was huge, huge inflow days, weeks here. But now we're getting this kind of flipped around. We even see Grayscale having positive days. Things are setting up for such an incredibly bright future for Bitcoin. That does not mean we need to forget our risk management and throw in 100x long and just think it's going to go. If it was that easy, every one of us would be 100 millionaires. No, there are mechanisms in place that even though it is so bullish, if you over leverage yourself, then you get caught in these traps. This is people, oh, it's going to go, and it just washes those out, gets people to commit shorts, and then it washes the shorts out by going long, washes the longs out by going short. You see, this is the mechanism of exchanging money from impatient people and greedy people to patient people that have a little bit longer time horizon. But this is looking beautiful. This inverse head and shoulders that we have right here is starting to make the rounds to the upside. In fact, I think right now we just tackled the highest price point that we've been since all the way back here. I cannot see all the way back here. What day was this? Since April. And this is on the way down. So let's look to what's going on. But where are the prices we need to be paying attention to? Let's pull up the liquidation map. Let's see what the markets tell us are areas of interest. Take out all the lines. Who cares about all that? What is the data in the chart that says this is the area of interest for liquidity? Remember, the market's going to move towards liquidity. Where are the brightest lines nearest to us, directly above us? This is right at that 67,000 mark. And I've been talking about the 67 mark. I think 67 is more important than the 74 previous all-time high, because that's going to be the kind of barrier for our momentum to really get going. If we clear this, I'm fairly confident this is going to move. I don't mean tap into this. I mean clearing up in here to 69,000. I think that will be signaling that the momentum is taking over for that bullish movement. I want to shout out everybody in the live chat right now, by the way. How many, we got 53 likes, got 105 people in the room, a little bit of a slow day, but that all of you're the true family here. Make sure you're hitting that like button, hit that subscribe button, ding the bell, and I want to see some bullish emojis in the chat. If you're a BitLab member, if you got that beaker next to your name, I see a lot of you got blue beakers now. It means you've been a member for a minute. I love you and I appreciate you. You help make sure that we can keep our team paid, make sure we can bring more and more content to you. I love you guys. But let's see some emojis. Let's get that. Yeah, buy now. There you go. It's all dependent on your time horizon, right? But the point here is all this bright color. You can know nothing about TA. Where is the bright color closest? It's directly above us. This means there is liquidity there that all the market makers need to do, or smart money, is push the price to that level. And these are shorts that will be liquidated if the price pushes into this. This means there's been a lot of shorts. People are trying to put, they're like, it's going down. So there's liquidation points that start at stacking up, a lot of them at this level. In this case, we've got 81,560, they're just stacking up in here. And there's very little in this blue area. And then of course we do have some long liquidations that are down here, but this is where the closest return is going to be for money, market makers and smart money. If they can get, even if it's organic, if the price can get up here and clear the zone, what happens? There's going to be a little bit of a barrier, but then if this can push through this, then you have forced closes of shorts, which means they have to buy long. To close a short, you have to buy that position long. So this is why when you get to some of these levels, it's not like, oh, we push through it and everybody gets excited, so then the price explodes. That's part of it. The majority of it is if you could push through this level, then the forced closes of these shorts drives a buy that has to happen in the market. And it happens very rapidly because these things that, especially if they get liquidated, it happens immediately. So you get this cascading very quick move to the upside. So let's pay attention to this. I do think by the end of this week, we're going to have I think we're going to have a lot of exciting price action this week, but there's going to be room for chop here. So we need to pay attention that we don't get caught just excited because it broke this level. That doesn't mean go and put in a 30x long that you forget about, because there's still going to be room for price action to come back and test this level before it continues higher. We can also see that on this liquidation levels map. This is relatively high. We also see this delta is getting fairly large on the spread here, meaning like when this is very green, I tend to hesitate on buying. When this is very red, this is slightly red, but when this gets very red, this tends to indicate that, if everybody's going short, might be time to long. If everybody's going long, might be time to short. And this line here is where the price is. This tends like a windshield wiper, go back and forth and clear out the longs, clear out the shorts, and clear out so this is kind of a challenging location at the moment because it did go all the way high, but it came back a little bit. But we have all this liquidity above us now. It's much heavier here in this liquidity for shorts being liquidated than down below us. So things are indicating to me that there is probably room to push higher a bit from here, but don't get caught in the chop. Let's go ahead and look at some charts here. And see C90 in the house, Green Day Profits. Your name's going to be the best name in the market here in probably about 3 months for the next year after that, because everything's going to be feeling good. But price action broke out above this, found support not only on this descending level of resistance, also roughly about, you know, the lows of this range here, also on this liquidity box that we had drawn here on this chart. Let's get down to the 4 hour actually. Go. Now this line here, we had marked this out when we saw this inverted head and shoulders right here. This is the depth from the neckline to the bottom. This gives you the target of where to look if you're just doing a short time frame trade. And look at where the price action, yes, it went up, didn't quite get there, broke down, and now is basically fulfilling this exact target that we marked out last week. What's interesting for me is that the price action pushes up and the volume was kind of spotty here. But then right here, we get one really big attempt for the bears to push it down because we see this huge bearish volume candle right here on the bottom of the chart. This is a lot of volume. This is the amount of volume on this specific candle. But then as this starts pushing up, we're getting a larger amount of bullish volume, saying that the bulls have a little bit more control at this moment. And their intention is they're like, no, this is going higher, sucker. So it is doing that. Now, with where we're at right now, if we do get a pullback, so this is already, actually, if we do get a pullback, which, you know, can happen in the spur of a moment just based on a comment from one of these Fed speakers or a lot of those things that are driving the market this week. If this does drop back, we have this beautiful spot right here, about $64,000, which is representative of the golden pocket of this fib from this move from here to the this current range high. Golden pocket is right here, 63.6, 63.8, which is also representative of about where that neckline was of this inverted head and shoulders, which would mean if the price action did fall down here, all this would be doing is also testing these previous range tops, the neckline of this inverted head and shoulders, as well as the golden pocket, which we know price very regularly comes back to. That's if we break down. If we continue higher, remember on the liquidation map we were just looking at, that level that we were talking about is right here, 67.8 up to 68.5. Looking at this chart right here, we can also see we have an order block, which is a different way to read data on the chart. We're looking at liquidations on the heat map. This is showing where there was a lot of liquidity interest from large players, institutions, big money, throwing a huge amount of orders in groups in the book. Basically, it's like a manipulation zone. You can see where there's a lot of liquidity interest between these regions, 67.2 to 69,000, which is also representative of where we saw those liquidation levels in the chart. So we have two different things that are telling us this is a kind of a sort of a barrier to entry. There's going to be some struggle here. And if not, if we're able to just slice through this, then I do think we're well on our way to making it back up to this this range high up here to 74. Then we'll reassess, and I do think we're going to be going higher from there if we take that out. So things are looking good. The money flow is back positive. The VWAP's angled up. RSI's angled up. In fact, not only is the RSI angled up, we also have a little bit of a trend line right here. See this rejection. RSI is actually breaking through that, showing a characteristic change in the underlying strength at the current time moment. Yeah, I could speak, I promise. But this, see, stochastics angling out. This is telling me that it's trying to make that run for it. Let's look at our baby girl ETH over here, just chopping in the range, trying to do everything it can to take your money. Let's actually go, I'm going to go right here. We're going to type in ETH. We're going to go to a clean chart because that just sometimes you just got too many damn lines and you don't even know what they were for. So we're going to start fresh here. So this is the most important line I'm seeing right here that we're tackling at the moment. This zone right here. See these rejection, and look at this rejection on this wick. Now we're attempting this zone again. If we're able to clear this, it's the first sign Ethereum's trying to have this reversal. But remember, ETH, I think, is going to be held a little hostage until we get some resolution. It doesn't matter to me if the ETH spot ETF is approved later this week or not. I think the market wants, what the hell is the decision, Gary? You know, he's just kind of dragging things, dragging the feet, frustrating the hell out of the market. But I will say, I still kind of am on the fence that the ETH ETF, my speculation doesn't matter about if the ETH ETF is approved or not, but the majority of people out there have been led to believe that it's not going to be approved, which as a contrarian thinker makes me think, and there's been some postings from Coinbase as well that has suggested there's a more likelihood than not, there's more likelihood than people are suggesting there is for the ETH ETF to be approved. So all we can do is like kind of let that data come out, because even if it is approved, remember with the Bitcoin spot ETF, there was a sell-off. So just because the ETH ETF is approved doesn't mean the prices are just going to rocket up to $4,000. Even if it is declined, doesn't mean it's going to break down to 500. Let the market shake the impatient people out in this decision, and then take your opportunity from whatever confirmed move comes from that. So it is setting up just on a chart basis. We have this rising channel coming right into the zone. If we can take this out, I'm watching the next level up, 3,300, which is basically the overlap of this zone right here. We see all these lows, option J, see this 3240. If we can push up to this zone, I expect that we likely will get a rejection for a retest of this line. If we just slice right through it, up and away, then that obviously means that we're playing make-believe, because that's not how markets work. So let's see what happens at this juncture. If this does break down, I'll be watching for a test back down here into the 2930 sort of zone. Let's take a look at Polkadot. Remember, I made a large move into Polkadot. I got another video coming out later this week, diving in a little deeper on some of the things that's going on with Polkadot, kind of explaining also why I made that big move. But when we look at what's going on here, let's delete the that Fibonacci. We have this trend line here that we've broken out of. We can just go ahead and delete this. It's irrelevant now. But we have this, look at this massive inverted head and shoulders now, right here. And this measurement, so weird to not have my keyboard in front of me. This measurement, measuring from that neckline, we can go a little lower, because it's kind of a sideways neckline right there. So this measurement out would be back up here to the 922 sort of zone, and look at right where this is. If I do option H, look at this, rejection, support, rejection, support. Look at all this confluence, and this just happens to be the target of where this comes, if Polkadot's able to break through this. And remember, there's so many things that Polkadot's got coming to their Polkadot, basically Polkadot 2, their upgrades, their development support for what they're doing with block time for the developers on their network, the slight coin burning that's actually coming out of that core time stuff that they're doing, and it's just interoperability is going to be the name of the game, along with DPIN and real world asset tokenization. Interoperability in this very segmented market that is out there, this blockchain space. Interoperability is going to be a core thing that's needed to really, if we want to see adoption grow. We've got to have ease of use, and we have to have things actually be able to work together. So this is looking good. If we can actually clear this, I didn't even notice that. Oh, never mind. That's a different thing. If this does break up into this zone, we can reassess once we get up here, because that's not a small move either. That's a decent sized move from where we're at now. That's a 30% move if we're able to take out this zone. So we just need to be patient. We still have negative money flow here. So I think everybody's waiting for a little bit of jolt. This week has a lot of those things with the NVIDIA earnings on the 22nd. We have the full moon. We have There's another thing, the ETH ETF. We have all the Fed speakers talking this week. There's a lot that's going to be moving the market, basically battling the narratives of what's going to happen. But remember, the name, if you take out all the noise, global liquidity is still up. Crypto liquidity, capital flow still up. So when we look at coins like Polkadot and we look at other things like Render, we look at Solana, we look at Cardano, it doesn't matter. All these things are governed by capital and the flow of capital. There's a capital flowing into the market of risk, and likely will start with Bitcoin and then trickles down into these other assets. Because risk in the crypto market is ultimately primarily driven by, are people willing to buy Bitcoin, the safest risky asset? And once that capital starts flowing, that's why you see that rotation of capital through the market. So although this is feeling like it's not moving, Cardano also sitting here feels like a stable coin. When it does start moving, it's going to rip. Let's actually look at Cardano here. We got a lot of lines on this chart as well. But yeah, this is just consolidating here. If we break back down, I expect to, more likely than not to hold this zone, this 42 cent. If not, this does break below this, down into this zone right here, 37. For me, an absolute buy. But this is just feels like it's doing the work just until that capital comes back. Look at this line that it's actually fighting right now. This is wondering why it's hesitating. It's at a known descending trend line. If we can move up, because currently this would be a higher low. If we can move up, the next level I'd be watching is up here in the 54, actually I'd say 54 cent zone, which is just this extended out, right? That's what I'd be watching for on Cardano. Aerodrome, we haven't talked about Aerodrome in a minute. How many of you are still holding on to Aerodrome? This one made me quite a bit of money. I took profits on it 3 times, rotated it into other assets, and then bought more back when it went low. But large sell off. We have an order block down here below us now. Push up, bounce again. So we've established almost a double W pattern, double bottom here. If we can hold this zone here, this may be in store for another leg up to the upside. However, there's also a bit of a bearish pattern forming here right in this zone where you have a descending triangle. We all saw, those of us that were here, we all saw that huge sell-off that we got in 2018 on Bitcoin, 2018 on Bitcoin, when it was just basically this pattern. And then the bottom fell out from $6,500 down to $3,000. So I'm not saying that's going to happen to this, but I'm just noticing this pattern did form. We're starting with the rejection, bounce, descending highs here. We're going to really want it basically this low to hold and break out of this, so this doesn't become an entrenched pattern and more likely to break down. So I would just be patient on this. Remember Aerodrome on Base. So Base is one of the fastest growing narrative attention in the space right now, being how fast and cheap it is on Coinbase itself. But we can also see ONDO actually doing some nice things, breaking out of this structure a little bit, pushing up, but still kind of, this has been relatively sideways. We had this target way back here that did not happen. So we can delete that. But we do see negative money flow here on the 4-hour. Did flip positive, flip back negative, but it's looking like it wants to flip back positive because we have the VWAP up, we have the stochastics up, we have the RSI looking a little weak at the moment. But if we come down to the 1 hour, let's look. See, this is starting. This looks bearish, right? But you have this price action moving to the upside, and then this consolidating, almost like a bull flag. But it's also rounding about. You see this low, lower low. Now we have a W pattern here. Now all of a sudden we have a higher low. It's like it's rounding bottom, trying to essentially take out this level here at 97 cents, essentially getting back above that dollar. And I think that this will probably do very well again. But we have to pay attention. The money flow is telling a confusing story. The signals are trying to say bullish, but the money flow is still somewhat negative. Let's see if it flips over on the 15-minute or now on the 15 minutes, just starting to flip bullish. So let's keep an eye on this. ONDO is one of those plays that I think is going to do very well in this coming market. Let's look at Link as well, because Link is one of those sleepers It's a 15-minute. I was like, what's going on here? Last time we had the huge alt run up early on last year, Chainlink was a first mover. And what are we seeing right here? Let's go ahead and move this over here. Delete that. What we're seeing right here is Chainlink just had a pretty massive move on some of the news they had last week, and also some of the integrations they're doing with Fetch and a lot of stuff. But this is 34% move. But we have to also realize a 34% move out of context that feels great. It's up. But when you look at it in context, this is just another, it's still ranging sideways. And this stopped right here at these lows. So until we really clear out of this is still just ranging sideways. And again, I do think that Link is going to be one of the best projects out there. I do want to shout out, guys. We do have, is Theo Rodriguez here? Theo, let me see if you're in the room. Not. Still got to get that $100 to Theo Rodriguez from last week's giveaway. We got another giveaway this week, and it's going to be drawn later this week. I posted it last week. It is the Galactics partnership. Make sure you remember, always use a VPN no matter when you're signing up for any exchanges or any gambling or even just doing anything with crypto, just so you can protect yourself from malfeasance and hackers. And I don't even want them to know where I'm at, so I let them know I'm in Liechtenstein or Brazil, specifically just because I don't want somebody to hack my crypto. And it does allow you to sign up for a lot of things when you do use a VPN. But if you retweet this tweet right here, all you got to do is retweet it and hit this like button. You are entered to win $100 USDT, which we'll be picking later this week. So make sure you go ahead, and I'll share this in the live chat. Retweet. That tweet right there, and go and check out with your VPN on. Go and check out this link right here. Check out Galactics. They will be launching soon. And if you help bring people in, you're also entered for a $25,000 referral competition. So participate in that. Go sign up. They're blending they're blending role playing game type of dynamics with quests and journeys and different planets. It's freaking awesome. That also has different gambling and dice and casino, iGaming, it's a community. They got a lot of great stuff going on there. They're launching June 3rd. So shout out to Galactics. Big love to you. I appreciate you. And everybody go check that out and retweet this. You get entered to win $100 USDT. And then, of course, by the way, when you are out there trading, you're making all that money, make sure you do not have your entire portfolio on an exchange. Make sure that you're also protecting yourself. And the channel sponsor, Arculus. Head over to getarculus.com. Best crypto wallet in the game. Basically like a credit card. You just put it up to your phone. Stores it, super secure. It's got three-factor authentication, biometric, password, and your seed phrase, and the card as well. If you lose a card, it doesn't matter because it's all within the wallet itself. You just relaunch with the new card with your seed phrase, and you're all good to go. It's my favorite wallet out there. So head over to getarculus.com and use the code LAB10, LAB10, LAB10 for 10% off. But today, guys, I think that's all I got. I got to go and I have to do a Polkadot video. I gotta get in the Discord. I gotta, really do what I gotta do to be with my people, the BitLab family people. So with that being said, I am going to BitLab Kelly. I am going to play this for you guys. If you are new here, if you do want to get involved in the BitLab, this is how you do it right here. I'm going to unmute this. I think with my new setup, the screen volume doesn't work on that, but that's all good. You can head over to this website, lab.bitlabacademy.com /Kelly, and you can get a great deal. You can sign up. You get 15 days free and one of the lower prices we've ever offered. The shout out Roland Crypto. Sorry about that. You can sign up here. Sign up 15 here. Boom. there's a link, but send up. But you guys got it. I love you guys. I gotta go. Thank you for being a part of the BitLab family. I'm here. You got Kelly on the road. Shout out to Silky over here. Yeah. Big love to everybody. Hit that like button. Hit that subscribe button. Ding that bell. Say it. Say it. Hit that like button.
Hit that like button, suckers.
Adios, everybody. Big love to you. Adios. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Adios, muchachos. Thank you for being here. All you crazy suckers can be my friend. Hit that like button, sucker.